All right, we might as well get started now then. So thanks for joining the webinar, everybody. As you know, over these sort of crazy times of COVID-19, we're trying to get out to everyone anything that's applicable as it comes to our notice. And this is one of those things. There's been a little bit of a change in what the banks are up to. So we've got Todd joining us to go through the detail of that. And we've got Joe who will be going through what that actually means to you in your financial situation. In essence, the banks have got themselves in a position where they need to make sure that their funding for their loans is at a reasonable rate. And with the higher LVR or loan to value ratios, so that's like the 95% or 90%, that's sort of the higher end there of what they'll lend against a property. The higher that is, the more capital reserves they need to have. So what the banks are doing at the moment is looking to reduce those LVRs or loan to value ratios. So instead of offering 95%, they might bring that back to 90 or 85%. Whilst that doesn't sound like a lot, it does actually have some pretty big consequences depending on what you're up to. So that's what we're going to go through today a little bit. So far, we've had Westpac has taken action, and we're expecting others to follow suit. So really, what we want to try and do is make sure that anyone that needs to be is on the front foot right now. So without further ado, I'll pass over to Todd, who will take us through the detail.
Thank you. Yes, so following on from what Scott's mentioned, the changes in LBARS are happening as we speak. And basically, we've just done up some slides and to illustrate some numbers on what that actually means and how it can impact your situation, either to unlock equity and having that ready to take advantage of potential opportunities, or how that could impact buying another property if you hold off for a little bit longer. So I'm just going to share my screen with what we've done, and we can work through that. Okay, so pretty much LVR basically means loan to value ratio. And what it is, it's basically the value of the loan to the value of the property. And they're the limits that the banks utilize to confirm how much funds they're going to allow you to access or get a loan to for the new property. So what we've seen already, we've seen Macquarie move. They moved very early. They've already moved 10% on certain product offerings, mainly around the equity unlock position. And as Scott mentioned, Westpac's also advised as of Thursday, they're reducing their LBRs mainly around the higher end, the 95%. But we're very fortunate while they've reduced the LVRs across the board due to the relationship that we have with Westpac Health and the financial advice that our clients get. We still have the advantage, and we've only been impacted by new purchases where the LVR of 95% has reduced. So we've kept our investment LVR at 90%, which is very good, whereas other areas of that bank have reduced. So, and we are expecting more other banks to follow over the next week or two. So utilising this as an example, we've got a $650,000 property and a $500,000 loan. So right now that's a 77% LVR. So right now, based on bank policies, we can get equity out to 90% of the value of this property, which means we can have a maximum loan of $585,000, less the current loan of $500,000, gives us $85,000 as deposit we can use for the next property. And that's just reflected in these bar graphs here. So what the proposed changes are is that we're expecting this 90% to reduce by some banks by in between 5 to 10%. So in this scenario, we just say, okay, well, what happens if the LVR for your respective bank, when it comes to purchasing, getting equity out of the property, reduces by 10%. So if it reduces to an 80% LVR, the maximum loan we can get against this property is $520,000, less your current loan of $500,000. That only gives you $20,000 to put towards the deposit of your next property, or invest in the share market, or whatever your financial plan may be. So as you can see, just by that one change to bank policy can have a big impact between you borrowing $85,000 and you know, significant funds to get into the next deal and be on your way, or needing to wait quite some time to build those funds up. Moving forward, what does that mean for if you're looking for a potential property purchase? So again, right now, with investment properties, our clients have the ability to purchase property with only a 10% deposit, or what we call a 90% LVR. So if we're looking at a $600,000 property purchase, what that means is to get into that property, we need funds of 84,900, so we'll call it 85,000, which means to get into this property, we need no cash, none of your personal cash to get into the deal. If this LVR here is to reduce, and we need, instead of needing a 10% deposit, we need a 20% deposit, the total deposit required to get into the deal is now 120. So if we add the 120 plus stamp duty plus some other little costs between legal costs and bank fees, we now need $144,000 to get into that same property. So this is the power of leverage that we're seeing right here, and access to bank policies. The difference between using the bank's money, or more of the bank's money, where you only need to put in an 85% deposit, or using less of the bank's money to get into the deal. So as you can see, the difference between getting to 85 and 144 is quite significant, and just sort of stresses the point. Now, if you're umming and ahhing, or you're needing to make advancements on your financial plan, taking action now to be ready for what's the next short term is pretty vital. So that's what's happening and what it means from a bank's perspective. I might pass over to Joe to sort of elaborate on the impacts that could have on a standard financial plan. Joe?
Awesome, thanks Todd. So I think there's a few things that we want our clients to be thinking about now, and there's a couple, and it's just two really simple things that will give you as a takeaway from these changes. So when we think about current interest rate environment, you know, interest rates in Australia are as low as they've ever been, likely to stay that way for some years now. So when you think about how you're progressing financially towards, you know, if you've got a plan or a goal, most people just think it's straight up and it's uniform and it just happens. But the reality is the things that you do and the things that we help you with can all have an impact. So if you wait, so if you think, look, it's just too hard right now, I'm too busy, it's not the right time, we'll just wait. And I guess that's the problem with waiting, is it's going to be much harder to get to your ideal outcome. You know, you might have to work longer or choose to live off less. You might actually just do nothing. You know, you might think, gosh, it's all just too hard, I'm too busy, and you do nothing. And unfortunately, that means your outcome will be a nothing outcome. What's particularly worse than waiting or doing nothing is you're well on the way, but you haven't got the right financial plan or the right strategy. So you're in this red box, this unprotected outcome. So you're traveling along, but something can go wrong. Job loss, divorce, death, illness, and you get thrown off track and you have an unprotected outcome. So what's super important is, for our clients, we want you to think about right now that you've got a goal, that you're actually working towards an outcome. And so I guess we want to challenge you to think about, what is that goal? What does retirement look like for you? And set that for yourself. Know how much you want by when, and whether that looks like working part-time, whether that's so you've got more time to take a sabbatical or study or work on a special project or have more time with your family. Set the goal, so we've got something that we can help you to track towards. The second thing that we would say is, once you have an idea of what this goal is, to just please reach out to us, your advisors, and have a quick 30-minute chat around what's happening right now in the economy, in the world, with interest rates, with lending, because things do change. And you know, this is a prime example of why having the right plan is super important, because times and situations change. So you guys have still got an amazing opportunity to take advantage of the lowest historical interest rates we've seen, you know, a disrupted stock market, so opportunities to get in when everyone else is running away. look, all these things, you know, we work with our clients to take logical, sensible and protected strategies towards getting your best retirement outcome or financial freedom outcome. So really that's our takeaway. Please have a think about it, set a goal, reach out to us and grab us for a 30-minute chat. And we're here to help and support and navigate through these difficult times and changing economic times. I'll hand back over to Scott to close on that. Thanks.
Thanks, Jo. Thanks, Todd. Just before we get to if there's any questions, I think a couple of key takeaways that we'd like to sort of get across today is that, as Todd showed, the difference between an average property going from 90% to 80% borrowings on it can be $65,000 of equity you can use. If you don't have that $65,000, that means you need cash of $65,000, and that changes everything. I mean, for a start, how long would it take you to save $65,000, right? That can put you back 1 year, 2 years, 3 years. I mean, depending on your circumstances, that can make a big difference to your end goals. So it's important to know that you're doing the right things now and using the right strategies now to help you get ahead. Otherwise, it can take you a whole lot longer and give you a completely different result at the end. I think secondly, as it's talking about if you're looking to purchase the next property, whether that be a home or investment property, I mean, the difference went between 0 cash required and 124,000 required, I think it was. I mean, that's massive, you know, it's just, that's the sort of thing that'll stop you doing that next property or making that progress. So this is why we've done this webinar today. This is quite big stuff. It can make a real difference to your both short and long-term goals. And I think the important thing is that everyone's a little bit different. That the progress curve there that we just had a look through, that Jo took us through, it shows that all that hard work's done up front, right? So getting the properties, accumulating the assets, whatever you need to do, it's all up front now. So the easier you can make that and the quicker you can do it, the better the outcome is down the track. And as things will change and move around during that time, we can manage it through that process a lot easier if we can get in earlier. So we need the time to make that all work. So hopefully that's been a little bit of help to people. As Jo said, if you've got any queries or you think this is for you, please reach out, have a chat with your planner, whether it's Jo, Gemma, Carolyn, Michael or Natalie, and just ask the question, what should I be doing here? Is there a way to get in? Because what's happening is the banks are very quickly saying, hey, as from today or as from a couple of days' time, we're changing the rules. So there isn't time. It's not like the usual movements where they say, right, as of next month, we're gonna move. So it's really get in touch now is the key. Are there any questions?
Yeah, Scott, one's just come through. It's a two-part question. The first one is, how long do we anticipate these changes to last for? And the second one is, you know, what do I do if I don't have a deposit for a home loan right now? So I think in answering the first question, look, there is talk that, you know, these changes are only going to last for 6 months. But again, you know, that's just what we're hearing now. It could last longer, it could be shorter. But I think the key point is, if we refer back to that table that Jo was talking about, you know, it's important to be taking action now while we can, with the variables that we know and the policies that we know. So yeah, so any action we can take now is brilliant. And the second one, if you don't have a deposit, well, depending on your circumstances, for the Medico guys, look, there are other lenders out there that we have access to where we can looking at to be borrowing deposits. You know, if you initially did have a 5% deposit and now you need a 10% deposit, you know, we've got access to about 30 different lenders, all with different policies. So it's not merely geez, I need to wait longer to get that deposit. You know, if you're in this position, definitely give us a call and we can, you know, sit down and work out and see what the best alternative strategy is for you guys, whether it is just short term or whether that is the best long-term product and lender for your position. So that's all that's come through at this stage.
Okay, we might wrap it up now then. Thanks for listening, everyone, and hopefully it's been helpful. We'll keep putting out bulletins or webinars as things become relevant. Otherwise, stay safe, stay well, and we'll catch up soon.
See you later.
Thank you.
Awesome, thank you.